payday loans in an annual cycle. Because if it starts to get to be 4 and 5 and 6, it becomes a treadmill that you can't get off of. And that becomes predatory. But on the other hand, in the course of a year, if you have 3 times where you might need short-term funding, that seems reasonable. It's very hard to strike that balance. The key thing is if you're actually helping the person. If they're borrowing just to repay back previous loans, they're slipping down a very dangerous path. We're also seeing some of the nano lending, some of the very short-term lending. And again, that can be constructive and helpful, and there's a need for it. But for example, in Kenya today, M-Shwari has very short-term, high-interest loans, and 40% of them are being used for sports gambling. They're not really helping people manage cash flows. They're just, it's gambling.
Yeah.
So I do think this is a troubling area and one that requires government regulation to set the right parameters. But again, the parameters can't be zero. You have to recognize there is a need, but you have to do it responsibly.
Yeah, but the most difficult thing is how to recognize there is a need.
That's right. That's right. That's right.
And
regulation is not easy. I think regulating at this moment in time of dramatic change is especially hard.
And from China's lesson, which I think that even if regulators say, okay, no pay the loans, but there will be, there will be underground things, and you can never find it, and you can never clean it out.
Correct. You need enforcement against that as well.
Yeah. So, but in China, there's still another problem that this bureau system, the credit history, there's still 460 million people in China. We don't have this credit history. But in this scenario, we will build this, but I think we'll build very gradually and very slowly.
Yes.
So when it is inadequate credit history, how to, to make the judgment on the over-indebtedness of these people?
You're right to phrase the question that way. A credit bureau is the right long-term answer, but it takes a long time to build it, make it mandatory, and make sure it is a high-quality source of information. We're seeing some very exciting, innovative models around the world to help people who don't have credit histories again, become visible. If you're living purely in a cash world, every transaction you do doesn't count. If you start to move into a digital world and you can get credit for the rent you pay, the utilities you pay, you can build a credit history, and then you can start to become credit worthy. And so there's a company called Destacame in Mexico and in Chile. And what they do is in Chile, they have a credit bureau that only tracks negative information. And what Destacame is doing is saying, no, you have lots of other information and you can control your own information. If you're paying to keep the lights on, or if you're paying to send your kids to school, you should get credit for that. And they have come up with what they call a Destacame score. And the banks are saying, wow, that's predictive. I can lend based on that information. So that's a very exciting model. A similar company in India is called Credit Mantri. And it works with people who again, should be credit worthy, but they're invisible to the credit system. So I think there's a lot of innovation that's going on out there. But I do think long term, you need a credit bureau that gives people, that allows them to count the payments that they're making and build a history. As we move from cash to more digital, and certainly China's been a leader in this respect, I think people are moving from being invisible to visible.
Yeah. You just mentioned some examples, but in China we also have Ant Financial, we have Tencent, they have their credit, they have
exactly.
data. But in government also worry about another thing that they don't want to allow the private sectors to do the things because there is a data protection problem that this company, this big tech, they would be too big, they have too many data rights. So what do you think about this problem?
I think this is one of the most interesting challenges that we as a society have to wrestle with. There's no question that the power of data and data analytics is enormous and can really change the world, and the potential upside is fantastic. We could create a financially inclusive world in part through data and data analytics. The flip side, of course, is privacy. And you're right. we're seeing companies all around the world amass incredible knowledge at a microscopic level of everything that you're doing. And I think that's a tension. How much privacy might you give up in order to be financially included? These are real societal issues, and they're not easy answers. And you might have a different view if you're poor living in Africa than if you're rich living in Europe. So different societies are wrestling with these questions, but privacy and data protection, I think, are the issues of our day.
Yeah, and I noticed that before the China advances a lot, and it's like big tech companies entering the financial part. But these days we see like Facebook, they want to have Libra, like Apple, they want to have a credit card with Goldman Sachs. From my observation, I think there's a trend like starting in America that these big tech companies, like even Tesla, they want to do something like insurance or something like that. These big tech companies, they're now entering this market and in the name of inclusive finance. What do you think about this trend?
I think Ant and Tencent are models that are extraordinary, and they are really providing services that are reaching people and clearly in demand. I think Libra is a different thing. Ant and Tencent are providing services on your phone that are extraordinary. And also it's a phenomenon that's particular to China. Those companies are now starting to expand around the world, but generally speaking, those huge platforms exist here in China and don't exist around the rest of the world, except now they're starting to expand. The rest of the world, you're seeing a lot of innovation, but it's much smaller scale. It's not the large platforms. Libra, in my mind, is very different. Libra is very exciting and has great potential, but it's trying to create a currency. My own personal view is there are many things that governments do well. There are many things that governments don't do well. But I actually think creating currency is one of the things they do very well. So I don't know where it'll go. But the positive side about Libra is if they succeed or something like it, they will reduce the cost of cross-border transfers. And there's a huge remittance market where people all around the world are sending money home to their families. And if you could cut the cost of that, that's actually putting money into the hands of some of the most poor people in the world. So there's a lot that's promising about it. But again, if I'm a regulator, I would be a little skeptical about someone who wants to create their own currency.
Yeah, but how about Apple? Like they have their own credit card, and the
credit cards are different than they're a currency. Everyone has a credit card.
I mean, you see this trend because like even the Congress in America, they want to pass a bill called "Keep the Big Tech Out of Finance."
Again, when you look at Tencent, and you're seeing spectacular innovation. I'm not opposed to big companies. I think they can be very creative and they can provide services that clearly are in demand. I would say some of the large platforms coming out of China are may be the way that what Ant Financial is trying to do is create a financially inclusive world. That's very exciting.
Yeah, that's exciting. But also there's a problem like these companies, they believe that big data could almost solve every problems. Like you can use alternative data to replace the so-called credit history, and you use this risk control, use this online lending to solve every problem. But do you think is it perfect? Do you think there's something that big data cannot be solved, and do we still need offline operations?
I think big data, and by the way, I think small data is also very, very powerful. Big data implies enormous data sets, and there's a lot of small banks with small data that's also very, very powerful and revealing. But your question is big data perfect? Obviously not. First of all, in this sector, when you're dealing with the most vulnerable people in the world, there is a need for a certain amount of touch. And I think another big issue that we're living through right now is this balancing of tech and touch. The old microfinance world started on the touch side and was too labor intensive and too paper intensive it's gotten to significant scale, but to really change the world, we need to use tech. But the tech world starts on a purely tech side, and we've seen some of the tech innovators realize that a little bit of touch in certain parts of the process are good. Collections and just onboarding in some of the early stages, especially with people that are, you have to build trust with people that have never used your service before. So balancing tech and touch is very, very important. I don't think, but to get to scale, you need more and more tech. But I don't think tech alone is all the answers. Now, it's also more complicated when you look at different products. So maybe payments is something that lends itself to extreme tech, period. But when it comes to larger credits or insurance or other, so I think the tech and touch balance, you need to look at different markets and different products. It's not one size fits all by any means.
Besides tech touch balance, do you think there's some risk in the big data? Because big data only reflect the past history.
Yes, algorithms are interesting, but you have to understand what they can. Algorithmic lending can confirm existing biases, and so many parts of the world want to make sure that lending is not done in any way that is discriminatory, and black box algorithms often just lend to people who have already successfully borrowed. So you do need to understand what's going on in those black boxes, and you do need to look at, forget what's going on, you need to look at the results and say, are they fair? So I think these are, again, I think you're asking great questions because these are challenging issues. Now, the answer is, the answer can't be that we throw that out. The answer is we have to figure it out, and that's hard.
Yeah. That's what I think the regulator want to do. They want to, because yesterday that China, the PBOC has just issued a plan for the fintech, and in the plan they mentioned that they need to have a model that could test and could explain the algorithm.
Exactly.
They want to break the black box.
And GDPR throughout Europe also wants to make sure that you can explain how decisions are made. People deserve that.
Yeah, but I don't know whether it's could be done.
It's very, very hard.
Yeah.
It's very, very hard.
Like,
I'm not even sure the people that design the algorithms ultimately know how the decisions are made. But you can test and see if, for example, the results coming out of an algorithm are discriminatory in certain ways. So you can test it after the fact, even if you don't know what's going on inside.
Okay. And let's talk about another person, which is quite popular in China, the Grammy model there.
Sure.
Yunus. Yeah, Professor Yunus.
Yeah.
So, first, what's your opinion on the Yunus, on the Grammy model?
Oh, I am. Dr. Muhammad Yunus is an inspiring figure. I've now worked in this industry for a long time, and I would say there's no one who's inspired more people to devote their lives to financial inclusion than Dr. Muhammad Yunus. So he's truly an inspirational figure.
Yeah, but what's the difference between maybe his idea and maybe yours?
So the Grameen model historically focused on group lending, and also didn't believe in returning profits to investors. And Axion has, over time, focused on individual lending, and has developed. Our model focuses on harnessing the capital markets to reach greater scale. And actually, Axion and Grameen have had this debate over history. If you're not willing to use the capital markets, I personally think you have no chance to ever reach 3 billion people. Dr. Yunus believes in a more philanthropic model, and that is fantastic and has worked in Bangladesh, but there are limits to, if you had all the philanthropy in the world, and you applied it to financial inclusion, it would not be enough.
Yeah.
If you're trying to make the financial system work for 3 billion people, you need to harness the capital markets. And to do that, you need to pay return to the capital markets. And so that's where we've disagreed with Dr. Yunus. But that's just in terms of harnessing the capital markets. His vision and our vision is the same, of trying to make the global financial system work for people who have been left out for far too long.
Yeah, there's a bank in Mexico called the Banco Compartos, like has a 85%.
Sure. Compartamos.
Sorry.
Yes.
Yeah, 85% interest rate, and I think Yunus thinks it's not a right way to do so, right?
So I'm very familiar with Compartamos. We helped create Compartamos, and you have to look at the Mexican interest rates generally. First of all, the interest rates are closer to 70%. And if you look at the band of interest rates in Mexico, Compartamos is actually at the low end. So Compartamos gets notoriety, and Dr. Yunus has focused on it, but there are lenders in Brazil that are charging 400%. So you need to look at the market and look at what they're trying to do. And Compartamos makes extremely small loans to extremely rural clients, which is very expensive to do. And they've done that over their entire history. And so again, you raised the question of interest rates. Interest rates have to be looked at in the context of the whole market. And Compartamos is not the highest in Mexico by far.
Okay.
So then you have to ask the question of what's going on in Mexico that interest rates are so high. But that's not a Compartamos issue, that's a Mexico issue. And there are other countries that are much, much higher.
Yeah, but I understand why Yunus is so popular in China. The reason is that, like I said before, like China government, they want to push the interest rate lower, like to 4% or 5%, these kind of things. And we also have a cap, like China is 24% line. You cannot cross it. If you cross the line, okay, you can have this interest rate, but the laws will not support you. And if you go over 36%, then it's too high. So people will, it will be seen as a high interest rate. So, do you think this line is reasonable, like 24%?
So,
is there any?
This is a challenge for regulators. Generally speaking, we've done a lot of research on interest rate caps, and interest rate caps, we believe, hurt the people that they're intended to help. They discourage lending to the poor. They discourage lending to these small mom and pop stores. And so if you could make it viable think about it this way. Interest rates are at 24% for microfinance institutions. If you could wave a wand and make it 20%, those 200 million clients would be better off by 4%. But what you've given up on is 3 billion people. You'll never reach them because it won't be economic to reach them. So I do think by setting interest rate caps, you may help a handful of people, but you're giving up on the big battle.
Yeah, that's true.
The other, just add, maybe you want to say something about the importance of innovation with fintech. It makes it possible to serve customers.
That's a great point.
With lower costs.
That's a great point also. That we're seeing spectacular innovation that will ultimately lead to greater competition and the lowering of costs. And you want to encourage that. And part of how you encourage that is sometimes when you put in interest rate caps, you're basically helping the companies that are already at a large scale. And that can discourage innovation.
Yeah. I think trying to do this because if you don't set a cap, then there will be like very, very high, like that predatory lending will occur again. So that's really hard balance.
Again, I have enormous sympathy for regulators trying to balance these issues. It's very, very hard.
Okay. And so talking about the smart campaign, like you have mentioned, like like you say, it's 10 years the entrance entered China, but we could say that the smart principle now is not very widely accepted in China, right? What is it? Where's the challenge? Is it because too high bars, or is it because people don't want to do that because it's high cost or something?
I do think the smart campaign has become a global standard, and I do think some of the best institutions all around the world have adopted that standard, and it is a very high standard. I do think what happens, we've seen this repeatedly, is one or two of the industry leaders in a particular market works to achieve smart campaign certification, and then the other institutions start to follow. And I think we have not had that breakthrough in China. And so you're right, but I think that can happen pretty quickly. Once a leader steps up and says, it takes a lot of work. Here's what this is: consumer protection, and most of these institutions start off saying, well, we do a good job here. And then they find out that the 7 smart campaign principles and the external validation is an enormously rigorous process. and then they find out that they actually have some work to do to achieve compliance. But it's very powerful. We've seen actually companies around the world be thrilled when they ultimately do achieve certification. But once an industry leader does that, others in the market start to follow.
Yeah.
I don't know if you want to elaborate.
Just wanted to add to that is, although Axion's been in China for 10 years, but we really hasn't promoted or introduced smart campaign principle into China until this year March that you and Yujila attended the workshop. So it was really the first time that we talk about smart campaign and train the industry about smart campaign principle in China. And then just recently, one of the industry leaders, the City Finance, Zhong Xing, they contacted us. We just almost finished the first ever smart campaign assessment of City Finance. So hopefully, by having industry leader like City Finance taking the smart campaign assessment, we'll have more institutions following their steps, and that will really help the whole industry understand what's the values, the benefit of doing this assessment.
Yeah. That's true. Actually, when first this March, we are, my colleague and I get first in touch with the smart campaign. It is really interesting because in China before, people won't talk. They will talk about it, but they won't take it as like certification. Even like you need to pay for that. For some Chinese companies, it's really hard to imagine. Yeah, that's true.
But it's really important. We're talking about transparency and privacy and fair and respectful treatment of clients and responsible pricing and how to avoid over-indebtedness. These are critical issues, and they're critical issues in the traditional world of microfinance, but they're even more important as we move into the digital age. And so I think those principles need to be rethought a little bit as we apply it to, lending over your phone. But I think the principles are quite sound and really important, especially, again, when you're dealing with the most vulnerable people in the world. You need to treat them with respect.
Yeah, that's true.
Yeah, and just add to that, related to digital finance, smart campaign, talking about what kind of a change that smart campaign principle indicator have made in the past 10 years, is we just recently released the digital finance customer protection principle indicators. So we just kind of added to the original standard indicator, which is specifically looking at digital finance practitioner, what kind of indicator they should really follow in terms of protecting, being responsible finance. And I also want to add that in the principle, we have 7 principles. You remember? 7 principles of customer protection. They don't mean anything if they are not really translated into practice. So that's why we create, over 200 indicators. And under each principle and standard, we have very specific indicator, how the institution should do in terms of translating this principle into the practice. So just answer one of your questions, ask how, the principle, one of the principle, top one principle is, design appropriate product and service. So how to make sure the institution has an appropriate product and policy and delivery channel. So one thing we look at is what's your product development process, and what kind of a methodology and process you follow in terms of designing the product. And we find that many institutions, their product design is very top down. It's basically from senior management or the headquarter product design team. It's really not from client perspective or client's needs. And the second area what we're looking at is if the institution is really closely monitoring the client feedback, client satisfaction with usage, the analysis of the client usage of the product. And are they happy? And the product are really used in a way that really benefiting the clients. So we need to look at if the institution is really if any proof that showing that they are tracking clients' feedback, satisfaction rate, dropout rate, retention rate, etc. And the third we're looking at area is how institutions define aggressive sales, and do they have a policy in preventing aggressive sales? That's a problem in China, we have to say. For example, digital credit is so popular that many institutions just promote the digital app like a digital wallet. Tell client this is very convenient. convenient credit. Just like digital wallet, you can get the money anytime you want and repay anytime you want. Only clients use the credit loan, the digital loan, they realize, oh, actually it caused the credit inquiry, affect their credit score. So even just like for very small loan amount, like 200, 3,000 RMB, it still affected their credit score. But they didn't realize that until they see probably the credit score.
Yeah.
So that's something that we call kind of aggressive sales. You don't really, and also against the transparency principle as well. You don't really let the clients fully understand what's the outcome of getting this digital credit.
Yeah.
So just to give you an example, how you can see that how we define the indicator in a very detailed way to make sure that all these standards and principles are really well implemented in the day-to-day practice of institution.
Yes, and about credit score, I have one more question. It's like, China these days, they are now building this credit score system. And like if you cannot pay your loans, and maybe you will not be allowed, to take the high, the railway, the high speed railway, and also you cannot take planes. So many limits. Do you think it's reasonable,
That's
using this?
question.
I don't know enough about how the scores are being used, but I also think it's different in different regions, and so I think it's still in an early experimental stage. I don't know if I would use a credit score to assess someone's ability to, use a certain transportation. Mostly people have problems with credit because of health emergencies. Someone gets sick, someone dies, or someone loses a job, and that hurts them from being able to repay a loan. It seems unfair if you then penalize them to, on using the transport or on. So I do think you have to be careful to not overuse a credit score as a proxy for something. But that said, we do need to make sure that we're lending to people that have the wherewithal to use credit well, and you need some tool to do that. So it's very important.
So what is appropriate use if it's not like limit to transportation, but in other countries? You need some penalties, right, if they don't pay your loans?
Well, we're a believer in credit scoring, using a wide variety of inputs and alternative data, but also giving credit for historically in many countries. Your credit score is based purely on how you have repaid past loans. So if you're making regular rent payments but you pay in cash, that's invisible. If you're paying for your kids to go to school, but you're paying in cash, that's invisible. If you're paying to keep the lights on, but you're paying in cash, that's invisible. We believe you should assess the whole person and look at all of those factors. And so that's very, very important. But then that's a credit score that should be used to figure out appropriate credit. I'm not as familiar with social scoring and how it may be used. And again, I get the sense that it's experimental at this stage, so I think there's a lot to be worked out.
China's complex because there are two systems, one by PBOC and another by another department. Yes, and I think their intention and their goals are different. That makes it quite complex.
You know more than I do.
no. So 时间到了吗？还是说可以？ 差不多。Okay. I might just finish my problems and I think it's time. Yes. And really thank you for your sharing.
I have to say that was among the best interviews I've had in a long
Really?
time. I mean, you just really asked some really great, deep, thoughtful questions, and you obviously know.
Thank you.
Thank you. Would it be interesting to hear Michael talk just briefly about some of the conversations that have been happening at the World Economic Forum?
Of course.
And, at that level. Maybe you could talk just briefly about the energy that you saw down and help people understand just how vital we are and how vital the conversation is in terms of policymakers.
Oh, if I understand what
if that made sense.
I do think it is important to understand that this discussion around financial inclusion is part of a much larger global movement. We've worked with the World Economic Forum, and we're part of a discussion that goes all around the world, from Davos, but also most recently I was in Cape Town in South Africa. And it is so exciting to see leaders, government leaders, regulators, companies, all across the African continent, for example, but it's true all around the world, seeing the value of financial inclusion. It's a movement, and it really is, and it will take banks, microfinance institutions, microcredit companies, fintechs, mobile network operators, regulators. It'll take all of us to really build a financially inclusive world. It's easy in any particular market to focus on what's going on here, but it's actually, if you take the lens back and see what's going on all around the world, and this is what Axion does, we're looking at this on a global level. It's thrilling, the changes that are going on right now, and the movement to use new innovation to reach people who've been left out in a responsible, fair way.
Yeah, that's true. And also, like, say, China's going abroad, going to the world, to try to copy our lessons.
Yes.
Yeah. Hope they will work.
And Michael will be speaking at the IFC with my bank in a couple of weeks.
Cool, cool.
SME forum. So.
Yeah, and at the time, maybe you can share with me maybe the talks and something.
Yes, and there's maybe interesting next Wednesday at the United Nations. Secretary General Gutierrez will be there with I think very senior people from Ant and MasterCard, and they'll be talking about financial inclusion.
Cool.
Queen Maxima of the Netherlands. So there's so much energy at that official level as well, which is exciting.
Okay, thank you.
Thank you.
I will keep in the feedback. Yeah,
Thank you,
Michael.
Thank you.
Terrific.
So much for